the No Bull Precious Metals Report. Today is June 11th, 2021, and we are wrapping up a very exciting week. I wasn't quite expecting that to occur the way it did, but man, we've had some ups, we've had some downs, we've had some all arounds. And, precious metals have been doing the hokey pokey with us. So, first thing that we want to do, as you might be used to by now, we're going to jump into the calendar, see what's going on. We're going to look at this week as well as next week, and then we'll hit the reports and see what goes on. So today, the only thing that was on the calendar is the Consumer Sentiment Index report, which again, not the biggest thing in the world. However, as we start looking into next week is just chock full of a veritable cornucopia of federal reports and data that's coming out. We've got Monday is pretty quiet, so everyone can kind of back off and figure out what's happening there. But Lord only knows what's going to happen with the G7 and what gets announced and whether there's movement on infrastructure or anything like that. So that could have a direct impact. But coming up on Tuesday, we've got retail sales reports. We've got producer price index, industrial production. That's going to be a big one. Capacity utilization, business inventories, and the home builders index. Now, you might not realize it, but some of these things do have significant impact on precious metals, as well as industrial metals such as copper, and to a greater extent silver as days go on. So definitely be looking at what the industrial production report comes through, as well as business inventories, because one of the things that we are dealing with right now is, silver should be shooting up, but one of the things that's holding it down is the fact that we've business kind of stagnating. There are supply shortages, there are consumer pressures, things like that. And we can't necessarily discount, especially on the electronics front, and well, not just electronics, but this chip shortage that's coming through that's affecting display drivers and a lot of other computer chips. So without chips, you can't necessarily do anything else that's further down the line, which might incorporate silver or other precious metals. So of course, that's going to depress a lot of the demand initially. But as we start looking forward to things, we might start seeing that start to pick up, in which case, if production hasn't matched, supply, demand, economics 101, blah, 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 all of that good stuff, we're going to start seeing an appreciation in the price of those component metals. So that's a big day. Tuesday should give us a pretty good indication of what's going on and what we can expect moving forward. But then Wednesday, of course, we've got a lot of housing stuff, import price index. That's always a good one. There's a 2 p.m. Federal Reserve announcement scheduled, as well as Jerome Powell is going to be speaking at 2:30. So you can expect that the markets are going to hold their breath, and who knows what will happen. So if you're investing, might be a good time to just hold your own breath and buckle down and see what the chairman has to say. Thursday, we have the standard reports on employment, continuing jobless claims, everything else. So look forward to next week, because that's going to be a big deal. So as we look at today, what's going on, we've got kind of a mixed bag. We have the Dow's a little bit underperforming, but the S&P is a little bit overperforming. Not by much. I mean, it's running pretty much even. But we're wrapping up the week. We're getting close to closing time. It's right now it's 2:16 where I'm at recording this. So generally, we're going to start seeing a little bit of tapering off. Everyone's excited for the weekend, and stocks have been riding high. So the equities are in the positive territory, but not by much, except for the Russell 2000. We start looking at other segments, and of course grains are very depressed today, but metals are kind of interesting. Whereas yesterday we had some red on the board with platinum, copper, and palladium, with gold kind of running even. Today we've got platinum, copper, and palladium that are in a positive territory, and then gold is actually running negative today by almost a whole percent day over day. Silver is doing pretty well, though. We're up by 1/4% over yesterday. So that in itself sets us up for some kind of an interesting interplay. So moving forward into that, we start looking the economic overview. Uh, we can see the 10-year Treasury rate. This is kind of a bellwether for where things are going. That continues to drop right now. Yesterday we were at 149 close, or 1.49 close. Today we're currently running at 1.46, and there's a lot of downward pressure on it. So it's quite interesting. I mean, we're even below the lowest of the low at 1.47 that hit intraday from May 7th. So over the 3 week or the 3 month time span, things are moving. So it's positive territory for economic sentiment. We should start seeing things that the market isn't going to get scared by interest rates or anything else. However, as you and I all know, this is something that can change, and it's largely a false reading. We all know inflation is actually going up. We have quantified proof of that stuff. So there are other factors at play, but this is a pretty good leading indicator that says that the rates are going down. So that's generally a positive sign. It's a macro indicator. Looking down, we've got the gold-silver ratio, which I've incorporated into this now. I've got two lines on here. One is the market-based gold-silver ratio, so spot to spot on gold and silver. We're at 66.78. So 66.78 ounces of silver will equate to 1 ounce of gold at spot. However, if we start looking at retail to retail, so I've done generic to generic, we are at 58.69 generic ounces at current average retail price. Will purchase 1 generic ounce of retail gold. So these are both good numbers, as long as pretty much the market rate is under 70 and declining. That isn't too bad. And again, as long as the retail is under 60, we're generally pretty good. So as we start diving into the markets themselves, this is an interesting one that I'm going to spend a little bit of time on. But as we start looking, we can see that there was a lot of motion that occurred between yesterday morning and today. And so zooming in on that, I will do that. And we can kind of see a little bit better. There was a lot of movement. We had that upward price pressure, but then on the 5-day view for that volume weighted average price, we could see as this hump kind of came up, we started coming down. We got down to right down at 1210 was the price, and the low price touched that +2. Which doesn't seem like a lot, but it's a good confirmation that the numbers are right and that we're looking at within the same view, because there does tend to be significant alignment that goes through. And even if you start looking at the chart itself, we can see where certain things touch, they reflect off, they bounce up, things like that. So when we start putting this with yesterday's volume weighted average price, you can see that silver is riding a little bit higher than where that's falling. And then if we start looking at the intraday, we're actually running lower than where it is for today itself. So that's all pretty interesting. It works, and so silver is doing its own thing right now. Now, as we start moving forward with this, and we look at gold is its own character. So I will take from yesterday at midnight over till right now. We can see that same hump that occurred after the dip. It went up, it hit over there around 3 a.m., and that started to decline, and gold continued to decline quite well. So, we had some bouncing around right at that 5 day. Didn't hold support at all. We bounced at the -2. Again, didn't hold support, even though it kind of flitted within the negative zone of the standard devs, and came all the way down. So when we start looking at even the previous day and the intraday, both of those are pretty much in consensus. They're both meeting around the same place. But gold is definitely underperforming today, which is kind of interesting. It's what's driving the positive rates of the gold-silver ratio. So anytime when you think that gold and silver move together, this is the type of day that really proves the point that they move sympathetically, but they don't necessarily move together. So looking at volume, going through, this was something that I picked up a little bit earlier today that I wanted to point out, that, we've had these spikes through here. I'll kind of zoom in on this a little bit more, just to provide a better view. We've had these spikes. I've talked about this all week, that we've been running kind of a little bit lower, but we've had a few spikes that have shown up into kind of normal territory. We had that June 8th spike in gold at 55,000 contracts traded. We had one yesterday at 76.2 thousand contracts traded. And then today we're back into the 40s on gold. If we pull gold away and we just start looking at silver, the spikes are at 40, 30, and then 22. So we look at those, and that's, it's the low side of normal, that type of thing. But what's really interesting, and this is the reason why I kind of throw this chart in here and evaluate this from time to time, is even though if we look right over at this point right here, this is a gold that was sitting there. That was that 76.277, which was right there, yesterday's spike. Now we can see that spike did have a lot of volume to it. However, its impact on actual price change was almost insignificant. It was 0.15%. So it was almost nothing within it, which means that although there was a lot of volume, it was almost evenly matched between buyers and sellers, which is why it's important to kind of keep all of this stuff in context. And that's the type of outlier that generally I try to look for. What's more interesting and what's more indicative of movement and direction and market sentiment is when we start seeing things that are, say, out in like this area, or this area, or specifically in these real low-lying areas. And I mean, even with this, the volume is pretty constrained. We're even talking about, right here is 1%. This is negative 0.5%. So, I mean, there are some times where we can get very low volumes that will impact the price on a 2% range or even more, either plus or minus. Or we get large volumes that affect it that way, which indicates that there's strong consensus in either direction. Or you're just dealing with people who aren't, there isn't a lot of volume, but there is a lot of price movement. So all of this is kind of interesting in lines. And really what's indicative about all of this is that the market is pretty stable right now, which is a nice thing to see. I mean, if you're going into, say, retail silver or retail gold, a steady market is a good market because it means that prices are probably going to be consistent for the time being. We're not expecting any type of major changes, which, if you're trying to make an investment, you want to get in at the right time, you want to get out at the right time, everything else. So we keep on seeing with the retail silver, kind of the same thing. Nothing has really changed this week that much. Again, we're in a very consistent market, so I wouldn't expect this too much. We've had some ups and downs, things like that, but generally we're riding just a smidge lower than what we were last week. As we look at kind of the itemized view for the retail price, retail silver is at $33.40 per ounce on average. That's across all of the distributors. Again, not too bad. If we look at, say, the Silver Eagle, The Silver Eagle did have some changes. One of the things that we can see is as we're going throughout the course of this week, especially these high side changes. We started out the week on June 4th at 50.75. Today we're at 51.39. That's high side. That's eBay pricing. On the low side of things, we've seen some adjustments as well. So we started out 38. Low side, we're at 38.65. So we've had a 65 cents upward trend on that. However, the distribution between average and median has changed. So we've kind of widened that out a bit, which means that there are more prices that are starting to ride at the lower end of the scale, which is a good thing. Overall, although the average price hasn't really declined, when the median does, it means that there's more retail consensus along the lower end of where the price range is. So it's not going to be quite as much effort to find a decent deal with it, and that's really what that type of thing means. And when you're dealing with American Silver Eagles, they tend to be, the cream of the crop, the highest priced of the standard bullion. So I mean, if you can do pretty well on those, chances are you can do pretty well on other ones. One of the things that I just added on this analysis, which I thought was beneficial to talk about, is dealing with the silver spot, silver retail divergence and where things are falling. Because I've seen in a lot of discussions that have come up, this whole discussion of, well, premiums are climbing, things like that. And I know that I tend to be pretty heavy on my analysis on dealing with percentage change, variations as they go across. But one of the things that I have looked at as well is looking at just the raw data. So what I've done is this view right here, which I've provided, is the divergence. So I have both the margin at percent and I have the margin at raw. So just raw dollars and raw percent. And you can kind of see that these are pretty straightforward. And this is just 1 ounce generic average. I have this set to a default 30-day view to see exactly how this stuff is moving. And there isn't a whole lot of movement. So right at the beginning of this, I mean, the margin percent, we're at 20%, 19.3% over between spot and retail. That equates to about $5.30, somewhere in there. Right here, we're at 18.47%, which that's the current average. And that equates to a $5.20 premium over spot on generics. If we shift that over to the Silver Eagle again, we can see, we're riding 52% over on average, all the way down to 50.31%. And these carry, a $14 premium, which is actually down from the $14.45 premium. So you can see where things are pretty consistent even over the last 30 days. So a lot of the discussion surrounding premium tends to be incredibly, it's perception based. As you start looking around, you see prices going up, you see prices going down, things like that. It really is unclear, and it's very easy to get confused on this stuff and get a little bit cloudy in the view. So I wanted to add that in just to start watching that. And hopefully if there are changes that come in, this is going to be one of the first places that you're ever going to have that identified. As we start looking at silver, the market to retail variance, you can see, and the reason I'm bringing this up today is we had one change that went from the average retail that really spiked pretty quick. I mean, we had it jumped from pretty much 0 to 1.37%. So there was a price change in Eagles that was a little bit non-reflective of the way spot was. However, the thing to keep in mind, and the reason that this really didn't show up that large, is because a 1% variance on like an American Silver Eagle is actually pretty small in comparison to the others. So it tends to be absorbed within it. you normally don't notice on the average price that much how things move. But we have seen that. And once that adjustment occurred, we started seeing basically alignment amongst the rest of everything else. There was nothing that was moving in its own direction. They were all moving in tandem, just at different levels. So that's something to kind of look at. As we look at gold, again, not too much exciting here. Gold has been gold. We see a little bit more of an accentuation of this decline from last week's prices. And I expect that we'll probably continue to see that, especially with gold declining as much as it has. Looking at the average price, we can almost see exactly how that mirrored from yesterday. So we saw the upward climb from the market price on spot, and then downward. And now we're at 1960.12 for one generic piece. We look and say we're going to go with a gold buffalo. Gold buffalo has a wide distribution, so you have to shop around on this stuff. But we're seeing that they're at 2074. And one of the things this is interesting to always look at on these prices is that for the most part these are pretty closely aligned. There's only a couple dollars difference between average and median. However, we start seeing that the average price is creeping up, whereas the median is starting to diverge a little bit downward. There does tend to be a pretty decent floor on where the average price falls, or where the low price falls. However, the upper price does have a lot of variation to it. So you do have to be careful shopping, and that's important to realize. It's not a real tight band, and there's a lot of opportunities for paying way too much. And again, going back to that variance on gold, spot is moving. You can see where the crossover occurred, where it lost all of its gains from earlier. It started going into negative territory, and as we started seeing that, the movement on pricing also declined into a negative territory versus the previous period. So spot price is right there with it. Everything's kind of moving in tandem. Gold isn't really that risky in terms of price. So if you're going to shop for it, just keep your eyes open, keep a lookout, and go to town. Again, silver is still the stronger buy in my opinion. Again, I'm not telling you what to buy, not telling you anything else other than, I like silver. I like the potential of it. I like the upside. And I think it has a lot of room to move. So that, I think, does it for this week. It was great to be here, and thanks for tuning in. If you like what I'm doing, feel free to like, share, subscribe, leave a comment. Everything helps the algorithm. And we will catch you next week.